4.0 and the marathon series which Padmanathan ji is taking on the valuation part and discussing each and every nitty-gritties and the time and effort he's putting in for preparing the case studies and facing our questions and then taking the discussion ahead. So it's a pleasure. It has been a pleasure to be part of this series as an audience and as a discussion in midst of the discussion. So looking forward for today's session, handing over the session to Padmanathan ji for another brainstorming query on valuation, and he would be taking section 15 subsection 5. Section 15 subsection 4, we have another speaker which who would be taking in the next session. So handing over the session to our speaker for today's session.
Thank you, Arpit sir. Thank you so much. This has been my fourth session. We have been discussing on 15.1, 15.2 and discounts. Last SMS we were discussing about the discounts. So today it has come to my last session on 15.5. So the format which I have been using is to take out case studies and discuss relevant practical aspects. And I think that is we can add value to our discussion by going on the practical aspects. So today's case study is also on a practical note. So for the paucity of time, I'm going directly into the case study. So this case study, Green Roof Limited has entered into a contract with customer for supply and commissioning of a solar electrical generator for 1 crore rupees. So in the project, we know that the actual value of goods are 80 lakhs. But whereas the rate notification entry, namely the goods and the service, both notification entries has to be read together in case of the solar or whatever this power projects are concerned, wherein 201 says that 70% will be treated as goods and remaining you have to go to the rate notification, the service notification. There 30% is deemed to be service, and this is how it has to be valued. That is taxable at 18%, and the goods are taxable at 12%. So 70% of the total contract will be deemed to be goods, taxable at 12%, and the remaining will be deemed to be value of service, taxable at 18%. So this is the overview of the taxability. So the issues for consideration is, if you see section 15.5, it empowers the government to prescribe the valuation. But if you see prescription as defined is always through rules and not through notification. So our first issue here is whether there is any, first of all, the issue is whether there is any valuation done here in this notification. If so, is it ultra vires? Section 15.5 is the first aspect that we have to look into. So we'll discuss this and then we'll move on to the other questions. So someone can break the ice, then we can take the discussion ahead.
In this case, the goods component is around 80%, right?
Correct.
And only 20. Yeah, so 20% is services. So
Correct.
Still we can enjoy that concession rate because it says 70% of your gross consideration and 30% should be your services.
No,
So
actually
that-
in this case, ma'am, it is not beneficial to us because actually 80% is taxable at 12%.
Correct, yeah.
And remaining 20% is taxable at 18. But if you go by this notification, you will have to pay 12% only on 70 and 30% you have to pay 18%.
Okay, it's 18%. Okay. Because we have some concession.
Actually, I corrected right away. It was a clerical error. It is 18%.
Yeah, that's okay. Yeah. Because we have some concessional rate for solar project at 5% also. So that also aspect can be looked into here, no?
Okay.
Because if they are fulfilling that condition, then I think they can go with that concessional rate of 5%.
5% is again only for the goods component, I think, isn't it?
Yes, it was for goods component.
Yes,
Yeah.
that was
5%.
increased to 12.
Now it
I
has
think.
been revised to 12%.
12%.
Yes, sir. Yes, yeah. So that is one thing I was just looking.
Ma'am, the broader issue is not about the rate actually, per se, the increase of rate. But the question here is whether there is a prescription of valuation here by way of the notification. when a whole contract can be artificially said that value of goods is so much, value of service is so much by way of a notification. That is the larger issue I am on here.
Yeah. I think 15.5 is stated for this case study. So we can apply 15.5 because there is a power given to the government to issue the notification wherever they are not able to ascertain artificially for the component of goods and services, like we have for real estate also 1/3 value of land. So I think similarly we can apply in this case also, right?
15.5 reads like this, man. Notwithstanding anything contained in subsection 1 or subsection 4, the
Yeah.
value of such supply as may be notified by the government on recommendation of the council shall be determined in such manner as may be prescribed. It only says that value of supplies as may be notified by the government. So does this mean that the supplies will be notified, but the valuation has to be done in the manner as may be prescribed, and prescription is through rules? So that is our basic question. Or the valuation itself can be through notification.
The words used is as may be prescribed and not as prescribed. So there is no mandate that there needs to be a rule specifically prescribing the valuation, is in my opinion. Because we can see that as may be prescribed is different from as prescribed in a catena of judgments.
Okay.
So it is always within the power of the government to prescribe rules, but irrespective of whether there are rules or not, if it can be otherwise made workable through the notification itself, the powers of 15.5 have been correctly exercised, and it gives us a workable solution. So I am of the opinion that there is no requirement per se that it has to be through rules itself.
Unni sir, I'm just reading the definition of, prescribed under section 287.
Yeah, I'm focusing on as may be prescribed and not as prescribed. So
Prescribed, okay.
the insertion of may is the question.
Oh, maybe prescribed, does it mean that it has to be prescribed, but in the future it can be prescribed, or as prescribed means already prescribed? For example, under 50, we had this issue.
This is the issue, difference between as may and maybe we discussed at the time of discussing 52 about
52,
4 years
yes.
ago. Yeah, for
Correct.
52, where we were discussing whether the lack of interest rules would it invalidate 51 and 53. At that time, we were exploring what could have been
Because
the difference.
there again, it is as may be prescribed and not as prescribed.
Yeah, so in that context, even though government came about with 88B retrospectively, so there was a viewpoint that has been shared by the department that 52 uses the words as may be prescribed, and there is no need that 52 has to prescribe.
In that case, Unni sir, what was the need for a retrospective introduction? Because if that was already covered, so doesn't that mean that there was a lack of rules and that has been now catered to by way of this retrospective?
I would suggest that there was an overall change in 42, 43, 51, and 53, which would have been better suited by a specific insertion of rules so that all kinds of various scenarios which are now hit will be covered. But in this case of valuation, we have a specific thing that is being directed by the notification itself, and which need not be as explained in a rule. So just because it is done in a notification does not go beyond 15.5.
Fine, sir. Any other alternative view, sir? Any other views on this?
Parnathan ji,
Yes, sir.
if we go through the valuation rules which were given for online gaming,
Yes, sir.
there's one important thing which I had noticed in this. First, these valuation rules were given on 6th of September 2023
Okay.
by way of notification number 45/2023.
Okay.
Amendment in rules was made. Thereafter, in that case, only rules were given, but the supplies were not notified in 15.5.
Yes, sir.
After that, by way of notification number 49
Yes, sir.
/ 2023, the supplies were notified.
Yes, sir.
And the previous amendment which was made in the rules was was withdrawn, and then again the same rules were notified.
Okay.
So that means that there is a clear distinction that the supplies have to be notified first under 15.5 and then the valuation rule has to be provided separately. If that
Correct.
would not have been the case, then there was no need for withdrawing the earlier amendment which was made on 6th of September
Then
and
reintroducing it again.
reintroducing it. But before, first they notified the supplies under 15.5 and then they reintroduced the same amendment.
Yes, sir.
So there is because in case of gaming, taxation of online gaming, the government has been taking a very safe path while they are making the amendments. When we are going through the rate notification wherein they have provided the specific rate for taxation, they have specifically put in the notification that whatever terms which have been used in this notification would be taking its meaning from the statute. So it's very surprising that in the rate notification, which is issued under Section 9 of the CGST Act itself, they are putting in explanation that the meaning which has to be taken from the Act
Right.
itself. So therefore, whatever they are doing for the gaming, somewhere down the line, it means that they are taking a very strict interpretation which has to be made while interpreting the law, and they are not leaving anything undone. So taking the same principle on this case, the ideal scenario which the government has followed in case of gaming should have been that the supply should have been notified and the valuation rule should have been provided in the rule separately.
So ideally, in this entry 201, they should have mentioned the reference to a rule rather than saying what will be the valuation. That
No,
would have,
they should have only specified what are the supplies which they want to cover under 15.5, and then a separate rule just like for gaming industry which they have provided in 31B or C.
they should
That
have
should have,
inserted in a rule.
yes, they should have specifically inserted that in the rule.
Now, can that be because lack of the doing that? Can it be challenged now? Can this entry, can this classification be now challenged? I mean, this valuation be challenged now?
See, it was
That-
challenged in before Gujarat High Court the prescribed and notified word, but
Okay.
then it was taken down and they said that precisely it doesn't make any much difference because I have not gone through in detail that what's the difference, but if you see the term prescribed has been defined under rule 2 under section 2 clause 87, which
87,
means
correct.
prescribed by rules made under this act on the recommendations of the council.
Correct.
And if we go through 15 subsection 5, it again says that the value of such supplies as be notified by the government on the recommendation of council shall be determined in the manner as may prescribe. And the term and the power to prescribe or the notify, we would have to somewhere, I have not gone in detail, I tried to, but could not go in detail. We have to somewhere make a distinction between section 166, which provides for laying of rules, regulation, notification, and section
280.
283. That what's the difference it makes when a rule is being prescribed and what's the difference when
And one more aspect we would have to look into is how the legislative part of it
Yes.
works. Like when the
Yes.
rule has to be laid down before the parliament, and then whether that has to be done for the notification. These aspects also, because somewhere down the line, that is the larger difference that both are going to make. How the legislative origin of these two differs.
Yes, yes. And who are the approval authorities in case of a rule and who are the approval authorities in case of notification, and whether there is any relaxation in terms of approval of notification, that has to be seen. And if any detailed study can be made, then only we can say we can conclude that whether there is any distinction between the rule which has to be prescribed and a notification that has to be notified. But yes, this distinction has been followed by the government in case of a gaming industry, which was not followed in this case of a solar power generator.
Thank you, sir. Any other views, or we can go to the next aspect?
One more doubt here. Like even for this abatement of land, we are taking as a 1/3, which is also has been notified through a notification. So can we say that even that 1/3 value of land should have been come through rules rather than notification?
That has already been challenged in this Munjal.
Yeah, Munishwar Manjal case. Yeah, that is challenged. But just as understanding from the difference between notified and prescribed what we are discussing in this, can we say that even that would have been brought through the rule, like how we are
Ideally,
discussing
yes.
for the solar
Ideally, yes.
projects?
Even for
I
the,
think
I think even for this TDR or what do you call this development
Mhm.
right, I think the valuation is prescribed through notification only.
Yeah, 4119, yes. So that is one aspect actually.
There are more than one occasions where the government has notified valuation through has notified valuation rather than prescribing it through rules.
Yeah,
So the next aspect would be
Sir,
once,
one
yeah.
doubt.
Yes, sir.
Even if it is to be brought into the rules,
Yes,
that
sir.
would also come by way of notification.
No, sir. The rules as such, it will be introduced, and then the applicability of rule as such may be notified.
Correct. So by way, they have the power to notify the rules,
Correct.
and they bring the CGS amendment rules, and they amend the rules,
Correct.
which is also again through notification.
Correct.
Now, can a notification standalone itself cannot contain the power which is already they have in the rule to amend the rules? So they, instead of in the rules, in the notification itself that is explained, how would that make the case bad?
Sir, because the rules as such, that is what we were discussing just now. We have to see the legislative origin of rules, because if suppose, for example, rules has to be laid down before the parliament. And
No,
after,
rules will not be placed before the parliament.
okay,
It
so
will be placed before the parliament.
if there is, so you mean to say that there is no difference in how a rule and a notification, the origin of a rule and notification, then we may not have a good case, because if both
That's
are
my view. Yeah, because both are pari passu.
okay.
So Nani, that is the precise study which has to be done, that why they have been made separate, that the rules and the notification. There must have been some difference. And
Correct.
whether that difference is that substantial, that if it is notified and it is not brought
Whether
in
there
rules.
is any assumption of
Ah.
power by way of
Yes,
prescribing
yes.
something through notification, unless it has to be done through a rule. Because
Yes.
once for the online gaming, then they have strictly followed that. That means that they don't want to risk something.
Yes. And regarding the land valuation of land issue which the ma'am has brought, I have just gone through the notification of 1/2017, and interestingly, the reference to section 15 subsection 5
Yes.
in that notification was brought from 1st of January 2019, when 70/30 rule was brought. So
Yes, sir.
prior to that, even though the land valuation was there, but they did not made a reference to section 15 subsection 5.
Yes, sir.
15.
No, RPG, when you see, if you see 3/2019, no, there also it's issued under section 11, read with 15.5 only. So I think there is a power that the notification is drawing from the section directly.
3/2019.
3
Yes,
of
sir.
2019. That is also
Yes,
issued under, that is also issued under section 11, read with 15.5 only.
So, Ayub sir, that is what our confusion is. Whether the power to the notification, that is only for notifying the services which will be, or goods that will be valued, or the
Yeah.
valuation itself can be done through the notification. That is the precise issue now.
Yes, Arupji, that is what we are trying to explore, and will explore later on, that what is the difference between the process of approving the rule and process of approving the notification.
Arpinji, both the rule as well as the notification has to go to 166 and be presented before the legislature for approval thereof. So, in effect, even if you can say that I did a rule and that rule will go to the corresponding legislature, it does not mean that if I issue a notification, I can bypass that. No, that notification also will be tested by the legislature. So, Section 166 covers both.
But yes, see, Uniji, we are not concluding anything. We are just giving a thought to be seen, that what's the difference between the two. And if they are same, then the government should also have not followed the same while notifying the gaming industry. There must be something which we might not be knowing. That has to be, and this is something to be read and understood, so that if at all required, we can make it a point while arguing any case.
Yeah, I think this is a interesting take. Yes.
Both are delegated legislature, but what is the degree of legislation? Degree of delegation to both has to be something which has to be seen. If there is no difference between the same, then why need for two separate mode of delegation?
Yeah, why online gaming is taking? Yeah, that is something we can explore.
Then the next issue is
But before moving on, Padmanathan,
Yeah.
if you remember, we were discussing 115.5 read with this rule issue when Kerala floods came. There was a proposal as to tax it whether it will come in 15.2A. So we were, I think ICA itself was submitting before the government that please introduce new rules invoking 15.5 to reduce floods value. So ultimately, it came about in 32A, but this was already discussed in 2018. So I think that at that time also we were all pressing for introduction of new rules instead of giving a notification to exclude the same.
Correct, and they introduced it by way of a rule only. Is it
Yeah,
still
but
there?
that is not in 15.5. They did it in 15.4. I don't remember. I'm just thinking, well, how was 32A enforced? Whether it was 15.5?
It was 32A said the notification, and it was inserted through rules, and it said the value of supply must be determined in terms
The
of section
question is
15.
whether it is through 15.4 or 15.5. That is the
There is no. See, the rule is never introduced by way of section 15.4, 15.5. It is only introduced by way of specific section. And what the rule says that it says that the value shall be determined in terms of section 15, but shall not include the cess.
So it was just invoking 15, so 164 only, and not specifically
Yes,
15.5 or 4.
Yes.
Mm.
Yes.
I believe we had given a representation that time to represent, get rid of flood cess through 15.5. I believe I have a copy of that somewhere. Let me check. Forgotten after 6 years.
next issue would be whether this artificial splitting, because once schedule 2 says that this is a service as such, or when we take a concept of principal supply and we say that the whole thing is a service, can it be artificially split again for the purpose of valuation is something that but that is the next issue for discussion. Suppose 80% is goods, and if you go through the if you see the principal supply and that is goods, can it again be artificially split for the just for valuation and taxing it the 30% of it at a higher rate?
Just a doubt, both are at the same rate, no? Now, or
No,
is it
still it is 12 and 18. Earlier it
Okay.
was 5 and 18, now it is 12 and 18.
now 12 and 18? Okay.
If you now what we are seeing is we are going to see it is a supply. Once it's a supply, we are seeing it is a composite supply, and we determine the principal supply as supply of goods. And at that point, we are supposed to value it as per as the at the rate of the principal supply. Now, bypassing it, can a notification say again artificially split it into goods and service and tax the service component at a higher rate?
Padmanji, attached to this thing, what
Sorry?
is the view of all the members that supposedly I am billing at 100 rupees? Let's take an example that I have a contract wherein the contract says that this is the value of the good which you have to supply, and this is the value of the service which has to be provided. Supposedly, say the contract itself says that the value of the goods has to be 70 rupees and the value of service is 30 rupees. And first, since the goods would be supplied, the invoice relating to the goods would be generated. And once the services are completed, then the invoice relating to service would be completed. So in effect, I am ultimately, when the contract would be completed, the billing would be 70 and 30. But first the billing would be of the goods and then the billing would be of the services. So whether this notification says that while I am raising an invoice, it has to be, supposedly I am raising an invoice of 10 rupees, the first tranche of invoice, whether it has to be raised in 7:3, or I have the option that I can raise an invoice for 10 rupees of goods, and subsequently when the contract ends, it should ultimately fall within 70:30.
I think you can bill goods separately and service separately, sir. We did not do every time 7:3. That is what my views.
So, sir, in this particular case, you are taking the two limbs of it, that is 70 and 30. But assuming that limb is not in the ratio of this notification, then what will happen, sir? Suppose that is 80-20.
Yes. So the first question is whether each of the invoices have to be bifurcated in 70:30, or we can make it as per the contract, and ultimately it has to fall into 70:30. And at the end, if it does not fall, then an appropriate debit note or credit note can be issued to adjust the value of supply.
RPG, if the contract
RPG,
has
can
to
I
be
ask-
made such. Sorry, go ahead.
Yeah, sorry, sir, you go ahead. No, only one basic doubt before going into that aspect. Is it mandatory that I have to comply strictly with 70 and 30? The proportion can be more or less of that proportion what has been specified, right? It need not be accurately 70 and 30, what I understand.
But ma'am, ultimately the value should fall within the ambit of 70:30. It cannot be higher or lesser, because that would then result in higher or lower taxation, and higher or lower taxation is not legal. So ultimately it has to fall within the ambit of 70:30. That is my view, and the appropriate adjustment at the end has to be done by way of credit note or debit note.
RPG,
Because
each tax
when
invoice
we
has to self-assess the value of the supply of values or value of the supply, right? So when you are issuing the supply value of a tax invoice as X, should that X be that particular supply as it stands at that point of time? So at that trigger of time of supply, this is a valuation, and that valuation should ultimately go to this notification only. So how do you get the flexibility of 80-20 at first stage and balancing it out in the next stage? Because then the invoice per se will violate 15.
Uniji, see, this amendment has been made in value of supply. No amendment has been made for time of supply.
Agreed, but I am talking about tax invoice. The invoice should capture the value of supply, right?
Yes, invoice should capture the value of supply. So if my contract says that the goods have to be supplied first, then my time of supply of goods would be there. And then it says that the services have to provide the time of supply of service would be there. Ultimately, this amendment has not been made with reference to 12 and 13. It has only been made for section 15 only.
RPG, aren't they all related, correlated? So we can't, if value is amended, the time of that value is linked to it, no?
No, sir, there has to be a separate notification for 12 and 13. It cannot be a case that without amending 12 and 13, yes, value can be there. So ultimately, what it says that the value should ultimately fall within 70:30. Time of supply has not been amended by this notification.
Okay, other than this real estate, I haven't seen any 12 and 13 notification.
Yes, but for real estate, there was a specific notification for 12 and 13.
Yeah.
So,
Okay.
Arpit sir, in this case, suppose the value of goods was 80% and it was 20%. After the whole contract is over, we can raise a credit note for that excess tax that we have. I mean, if it is opposite, like if it is 60 and 40.
Yes, and that is one view, because in one of the cases for solar energy, solar power generator case, wherein the department had challenged the rate, we made this argument that this amendment has only been brought for section 15. It does not make any amendment in 12 and 13. And since the legislature itself has gone beyond the idea of composite supply while identifying the goods and services, so I am no longer treating it as a composite supply. I am treating it as two different supplies. And if these are two different supplies, then two different time of supply provisions would be applicable, and I have to raise the invoice as per the time of supply provision. Ultimately, the value should fall within that ambit.
At the first instance, why don't we continue with that 70-30 rule, saying that yes, I agree with the value of supply. So let's say the solar, the goods is 80, but only for the purpose of this, I am making the taxable value to be as 70. Like even if the invoice can contain 80 rupees is the transaction value, the taxable value is 70. For the services, let it be the transaction value 20, but the taxable value 30, and do the taxation. How does it?
Venuji, in case of large solar power generating contracts, there is a specific mention in the agreement that the goods have to be well supplied, and part of the amount would be given for goods, and then the services have to supplied, and then when the ultimate contract would be completed, then the balance amount for the goods would be released. So in that case, if there is no service being supplied and only goods are being supplied, so there might be a case that the recipient might say that you have not supplied any service, we have only provided goods, and ultimately whenever the service would be supplied, we will give you the service part. So presently the rate of the goods should only be applied.
Agreed, RPG. What I'm saying is, I would still raise a service invoice with 0 rupees transaction value, but deemed taxable value as 30 owing to this.
No, that is the question, that whether this notification for value also affects the time of supply. See, ideally, in 90% cases, this is happening of 70s to 30. But in case of large solar power generating units or contracts, whether this whether this valuation notification affects the time of supply, or since the government itself has treated these as two different supplies, so my time of supply for these two different supplies would be also applicable differently, separately.
Arpit sir, even if the time of supply is not hit here, even the invoice can be raised before the rendering the service also, isn't it? Only the upper cap of 30 days or 45 days is given, no? Can I not say that though I have not rendered the service at that particular point, there is nothing that bars me from raising an invoice?
Yes, we can always say. See, the question which I am trying to raise, whether this value also affects the time of supply provisions. I can raise an invoice, I can make a 70s to 30, but supposedly whether this notification of value of supply also affects the time of supply under 11-12, or they have to be treated separately, and ultimately the concluding part should fall within ambit of 70s to 30.
I feel that those are disconnected, valuation and time of supply, and therefore the invoices can be raised differently for service as well as goods. And as you suggested, we can recalibrate the 70-30 ratio at the end of the contract.
Arpit sir, just a doubt here. So when you raise the initial invoice for the supply of goods, so you are calculating 70% as 12% and 30 as 18%,
No.
right?
No. We are only raising
So
for
you are taking at 12% in the initial.
Yes.
Okay.
Then whatever the ratio, at the end, we are calibrating it by way of a debit note or a credit note.
Okay. In one of the case which I was handling, sir, there were two subcontractors who were providing these services. One was like supply of goods and a small component of service, and one more subcontractor was only giving the services. So basically, the problem is they both were entering into as a joint venture, and they provided the solar supply to the main contractor. Now the issue is, when you are going to calculate this 12%, 18%, I think the contractor who is giving both the goods and services, we have to apply this concession rate. And the contractor which is giving purely the services simultaneously, we have asked them to charge at 18%.
Yes.
So that is because if we read in that notification, sir, they have used as parts of manufacture. They have not used the parts of solar manufacture in that notification entry 201A. So that was one more point which was trying to get highlighted to apply that concession rate. They have used just as a part of manufacture. They have not used specifically as part of solar manufacture in that case, sir, in that notification. So something we were trying to bring up under concession rate, but based on this, we have taken as 18%. So just a thought process, sir, on this solar notification.
And one more point, if at the time of contract negotiation itself, maybe just to avoid disputes, if we agree with the customer that 70/30 will be followed by default from day one, irrespective of the contractual terms and conditions, because ultimately there is no ITC also which will be available to the recipient. So it shouldn't matter to him whether the goods are received or not, or services received or not. So that can also be done if possible at negotiation of the contract stage itself.
Sir, I think the point that Arpit sir was trying to make is by if you take 70% first and then 30% later, there is a revenue, there is a delay in government getting the revenue. I think that it is more of a question of interest for the government part because of this the time of supply. Isn't it, Arpit sir? That is the main issue.
Yes, sir. Pandanaji, now we can, this was the food for thought for the members.
Yes,
And
sir.
members can go through and share their views in the next session. So we can move ahead with the case study now.
Next issue that we want to discuss is how Munjal Mahesh Bhai will affect this particular notification, because there they have said that where the actual value of land is available, that has to be taken. Can such a view be read into here that if actual value of goods are available only, then that should be taxable at 12%, and remaining only can be taxable at 18%. Can that ratio apply in this particular scenario also is something that we can discuss.
The judgment of Gujarat High Court is before Supreme Court. It has been challenged by the government.
Yes, sir, it is pending before Supreme Court.
That's pending.
Is there any stay on that, ma'am? Any idea if there is any stay on that?
I don't have idea of stay, but I remember that it is pending before Supreme Court.
No, it is only admitted. It is only admitted.
Okay.
There is no stay, Arudha, no?
No.
No stay, I think.
So currently, assuming that is still in operation, can that ratio be read here?
For that, you have to challenge the explanation deeming the 70/30 ratio as being arbitrary.
Can we say that something has been excluded in that, which is not at all a supply of goods or services in that abatement of land notification? Because it is excluding the sale of land, which is neither supply of goods or services. But in case of this solar notification, basically it is trying to bifurcate between the goods and services.
No. The basic premise is on same. Because in both the cases, there is a deemed valuation concept, wherein in the land case, they are deeming the land valuation to be 1/3, whereas Manish Munjal Bhai challenges that it has to be taken on the actual basis because actual land valuation is available in case of villas.
Correct.
So similarly in solar also, like in many projects, I have seen personally that the ratio is not 70/30, it may be 80/20 also. So there also the deeming provision is actually to be challenged. So they are on the similar footing on that part.
80%, you are forced to take only as 70% and pay 12, and on the remaining you are forced to pay 18%.
Yes. Well, even though I have all the detailed bifurcation available with me for 80 and 20. So that is one thing.
Now, to my mind, that seems arbitrary, and I think there is a scope for challenging the notification.
Yeah, but right. As Unni has rightly shared, what we are saying the client is that you cannot say that we'll just challenge for our own thing. If we have to challenge, we have to challenge the notification itself. So any other views on this? Shankar sir is also there. who is working deeply on real estate.
So let us have someone who's doing this project apply under section 60 and get a provisional valuation under 70/30 and take it to High Court stating that it is arbitrary.
Yes.
No, but if you want to challenge the notification, you can directly do also, no? Whether you need to get an assessment for that.
We need a cause of action for something,
The
right?
notification itself is my cause of action, no?
No, my
but
my
yesterday-
supply being valued in a different manner should be the trigger point in my personal
Yeah.
opinion. Otherwise,
to
I'm
have a
not
level-
aggrieved.
And I have to have a locus standi. Yeah, if I have not agreed, then. So Ramandeep ji or Shankar sir, if you want to add.
Nothing, sir, nothing. But I also similarly view that we can definitely challenge on the similar grounds once this actual valuation is not accepted by my adjudicating authority.
Okay.
Ramandeep, sir, what is your view on this, sir?
Yes, sir. Yes, sir. That is what I stated, that it can be challenged.
Okay,
I have seen some companies here in our area also. They are following the actual method only. I mean, they are very aggressively on this. They are following the actual valuation only, and they have made their mind to challenge this notification also in the future itself.
If we go through the rules which were there in the VAT regime, in that case, they specifically provided that the value of the land would be taken in Rajasthan. I'm not aware of the other states. In Rajasthan, when in 2014 this taxation of builders was brought in, the valuation rule provided that the value of the land would be taken, which was notified by the government on first day of that year. So supposedly I'm entering into a flat sale, say on 22nd of September 2023. The value of land would be of 1st of January 2023. So in that case, they specifically inserted a land rate based on actual calculation to an extent. But in GST, they have gone distinctly by way of 1/3. So that can be taken as a reference to challenge also.
understood, sir. Valid point.
But unlike the land value case, if you apply that to this solar thing, 70/30 or actuals would effectively render 70/30 OTOs.
Yes, Uniji, there was a specific discussion right before Delhi High Court wherein the matter was referred back to GST Council, and there was a discussion in GST Council regarding in 70 and 30, and detailed report was placed before the council by the department that if actual figures are taken, ultimately the valuation would come out to 70/30 only.
So it is not arbitrary and based on scientific calculation of all India data.
Yes, yes. There's a specific case study and detailed analysis of on this aspect in GST Council meeting based on a reference made by Delhi High Court.
But sir, on a national level data that may be correct, but to case basis, can we not say that it is arbitrary? Where it is more we are actually able to find out the value.
Yes, I'm just making a reference to the
Yes, sir.
that analysis was made.
I think that we have broadly discussed few aspects of section 15(5), and I think today's session, I think I'm able to cover, and only time I'm able to cover before time also, because usually we'll have spillover. So if I think we can wind up the discussion on 15(5) because it's not a very big section. I take this opportunity to thank SMS Group for giving me this opportunity to present on 15. More than the group, it has been a huge learning experience for me. because when I entered this group and the level of discussion that was going on, I was wondering how I will be able to even fit. I was a misfit in the group. From being a misfit in the group to actually able to speak for SMS, it has been a very honor for me. I thank all the participants. I would like to make a special mention to Unni sir. He has been really considerate and helpful for me with regard to discussions. He has given a lot of inputs while I was preparing these case studies as well. Thank you, Unni sir. I take this opportunity to thank you. Also thank Arupda for always being affectionate towards me, for calling me to the SMS. Thank you, sir. I think I am completing my part of section 15. My counterpart will be taking the valuation rules. Now I hand over to Arup sir.
Padma, thank you so much. I think we can't thank you enough because we had shared that we will be taking only 2 sessions, but then ultimately it went to 4.
Yes, sir.
And I think we all have immensely been benefited by the discussion because the entire group has been discussing and sharing questions. That has been a great learning for all of us. So thank you very much. But I would request Unni ji, who is one of the pioneers behind the entire valuation marathon series that we have, so to have a few words, and then I think Arpit ji also. So Unni ji, over to you first, and then to Arpit ji. And Venu ji is traveling, so I'm not sure whether we can share. But over to you, Unni ji.
First of all, great. Thanks to Padmanathan for taking valuation at such depths. Like we were having detailed sessions on SMS for every section where the speaker was giving an analysis of the various nuances. Now, Padmanathan came about with a novel idea of introducing case study-based approach to studying section 15. And that was a really nice initiative on his part to make us debate over the nuances of each subsection by applying it to a very tricky scenario. So that would really help us, all of us, when we apply valuation principles into each case that we study. So kudos for thinking about introducing case study approach in SMS. You are the first person to do so. So that's a great thing, and I'm sure that those coming down the line, I'm sure they will emulate this case study based approach in some parts of their discussions. And second, I'm very thankful to you for introducing very new concepts into section 15, which were not being discussed and which needs to be pondered upon. And I'm sure that some of these are going to be addressed at some courts at various levels. And perhaps some of our discussions will also echo in courtrooms. And we might see some judgments where our thoughts are mirrored. And let's see that 15.5 and 15.1 to 15.3 are being harmoniously read and principles of valuation GST are finally settled. So let's hope to that. I'm sure that we will all see this in the upcoming years. And specific thanks again for taking 4 weekends out of your precious time to enrich all of us with the knowledge that you have gained. Thank you, Padmanathan. Over to Arpit ji and Venu sir.
Yeah, that's it. I think there is nothing much to add unless if someone wants to give any comments.
Thank you, Padmanathan ji, on behalf of the entire group for this detailed valuation 4.0 and all the series prior to this also, because what you have brought through the case studies, that the analysis part, it might seem on the face of the case study that this is the apparent answer, but when we all put our thoughts across to the case study, various interpretation issues and how the things have to be interpreted comes across, and this will definitely make us to go make us to read the section again and again and arrive at the new interpretations. So it was a great experience to be part of these valuation 1, 2, 3 and 4.0 series, and we look forward for more such enriching sessions from you, although we will not be calling you soon because you might be exhausted in preparing these detailed case studies, but we will be troubling you soon in another sections.
So thank you
Thank you,
everyone.
sir.
So yeah, we are really lucky that today we are closing on there, and also we are on time. As Padmanathan has said that he's just done it on time. So Padma, over to you for your final concluding remarks, and then we'll close the meeting.
Thank you, sir. So with this whole part of valuation, one thing which we have come to the light is that valuation is going to be an issue for quite some time. It is not going to settle soon because more and more, I think, as more and more services or more and more new way of rendering services and goods are coming up, there is always a need for new valuation mechanisms also, which is why I think the government has put in power, delegated power. The legislature has put a delegated power on the government to issue valuation rules accordingly. The result of which we are seeing in the form of this online gaming, corporate guarantees, and many other such similar situations are going to come up in the future. I think we'll have a very interesting time ahead with regard to valuation. But whatever it is, always we have to remember is that the principles of valuation has to be always read in consonance with 15.1, as Unni sir said. 15.1, 15.2, and 15.3 has to be read in together, even if there is a specific valuation rule as well. And it has to be fitting to the general consonance of the scheme of GST as well as the constitutionality, and something that overrides the basic concept of supply. That will always be something that we can challenge before the courts. So with these words, I am concluding my part of valuation. Thank you so much.
And
Thank
just
you,
to
sir.
highlight the depth of the group, that while we were discussing this 70s to 30 and the Gujarat High Court decision, I made a reference to the SLP which was filed before the Supreme Court, and Avinash ji immediately replied that the present status that they have completed the pleadings and the argument would start soon, and the decision expected in the case is expected to come on board in the month of May.
Nice.
Wonderful.
Great, sir. That
Like the real-time update. Real-time update.
Real-time updates.
All the sessions are recorded and updated, so members can actually look at the earlier recordings.
So with this, we are closing the meeting today. Looking forward to the next Saturday when Neha Mehra ji will take us through the valuation rule. Thank you very much.
Thank you. Thank you all.
Thank you all. Thank you so much.